thank you all for attending this session today. We're going to talk about debt reduction specifically. So let's go to the next slide. Okay, debt reduction, and we just state the date, which is today's date. And let's go to the next one. All right, what is debt? And let me also state this, the information, these slides were compiled using information from the Consumer Financial Protection Bureau, the Federal Trade Commission, and also the Credit Smart Workbook. So debt means any obligation or alleged obligation of a consumer to pay money arising out of a transaction in which the money, property, insurance, or services that are the subject of the transaction are primarily for personal, family, or household purposes, whether or not the obligation has been reduced to a judgment. Now that's quite a mouthful there, but again, this is the official explanation as I pull up from the Federal Trade Commission as far as the explanation, the official explanation of debt. Let's go to the next slide. So let me say this in continuation of the debt piece. Having too much debt can affect us in a lot of ways. One, if you're trying to buy a home. Two, you're trying to buy an automobile or other loans or some other types of things you're trying to get money for in order to, maybe it could be an emergency situation, etc. So we have to be very careful about how much debt we have. It's okay to have some debt, but when you get to the point where you have too much debt, it can impact you dramatically. So here's some budgeting foundations. You want to evaluate your needs versus your wants. You want to develop a budget. You want to establish a savings plan. You want to establish an emergency fund, because it's just a matter of not if something is going to happen, it's just a matter of when. So you want to be prepared for that. Establish and use credit wisely so that you don't get yourself in a situation where you're in too much debt, but establish and use credit wisely. You want to set some financial goals. You want to choose a financial institution to service your needs, whether that be a bank or a credit union. Again, you want to take a look at what your particular needs are. A credit union may serve you better in some situations. A bank may serve you better in some situations. So you want to take a look at that financial institution and the needs that you have and select one that's going to best suit your needs. Next slide, please. So here are some debt reduction strategies. Step number one, there are two basic strategies that can help you reduce the debt. So we got the highest one method and the snowball method. Now let's take a look. Let me just move this up a bit over here. All right. So this approach, okay, so the highest interest rate method, like I said, that's two, highest rate and the snowball method. The highest rate method, this approach focuses on your debts like credit card and student loans, which has the highest rate of interest. The goal is to pay off the highest interest rate debt as quickly as possible because it's costing you the most, because it's at the higher rate. While it may not feel like you're making progress, this method will help you eliminate your costliest debts first, which can save you money in the long run. So let's go with the second one here, snowball method. This approach focuses on your smallest debt. The goal is to get rid of it as soon as possible. So you will keep on making the minimum payments on all your debts, and you put any extra funds you have towards paying off the smallest debt. This will help you to pay sooner. So if you pay something up, well, we can get to that in a moment here. Yeah. Once you pay one smaller debt in full, dedicate that freed up money to the next smallest debt. So when you pay off one, take that money, don't put it back in your pocket, or put it towards something else in the household. Take that, and since you are used to not having that particular amount because it was used to be used for paying another debt, take that and apply it to another debt so you can reduce that. So this way, you create a snowball of payments as you eliminate each debt. Unlike the higher interest rate method, you'll see more progress quickly as you pay off smaller debts. However, you may end up paying more in the long run as you won't be focusing on the larger or more costlier debts. So again, you want to evaluate which method is going to best work for you. Let's go to the next slide, please. So step 2, you want to create a debt reduction plan. Now, there's a link in the slide. This link is in, as with all of the links, it's in the chat room. So you'll be able to go in and take a look at that and pull it up for your own situation there. So put together a strategy that's right for you when you're creating a debt reduction plan. To use that worksheet, you'll need copies of your bills and interest payment information. If you're motivated by saving the most money while paying off your debts, the highest interest rate might be the right choice for you. On another method there, if you are motivated by seeing progress a whole lot more quickly, then you may want to consider the snowball method. Again, you want to choose the strategy that's best for your situation and put it into action. And again, the link for this is going to be in the chat box. Next slide, please. Step number 3, organize your monthly bills. You want to understand what you owe. And the best way to do this is using a bill calendar. And this link is also in the chat box as well. So understanding what you owe and when will help you to manage your debt. You can use the bill calendar to keep all your information in one place as you tackle your debt. You don't want to put it in an obscure place somewhere. You want to keep it someplace where you can notice it and look at it every day in order to see where you are. Use the bill calendar to see all your bills and when they're due. Keeping track of your monthly expenses can help put you one step closer to reaching your goals. Next slide, please. All right, so the first step to staying on budget is to know what you owe and where your money goes. And believe it or not, some people don't take notice of that. They simply, okay, I got this bill, write out the check or go online and pay it bill pay, and don't really have a record of, okay, here's all that I have. Let me take a look at this and make sure that I've got everything here that I need, or I'm paying, whatever the case may be. So basically, you want to use a bill calendar to help you there. If you're not able to make ends meet at the end of the month, the timing of your income and expenses may be off, as I alluded to a few seconds ago. The bill calendar helps you to budget for the entire month by tracking when your bills are due. And again, this is in the chat box. Next slide, please. So you want to gather all of your bills, write down what each bill is for, the amount owed, and the due date. Put the bill calendar in a place where you can check it weekly. And then you use your overall budget as a guide to see how you're doing. And again, this is a link to it. It's in the chat box that you can pull up an overall budget. Let's go to the next slide, please. Where does my money go each month? Well, most people have regular obligations like rent, utilities, mortgages, car payments, and insurance payments, and a few other things. These usually have a fixed due date, and if you're late, you're likely to pay a fee and risk a negative entry in your credit history. And of course, in addition to having too much debt, being in a situation in which you are being reported to the credit bureau on a consistent basis will also affect your ability to get a loan by way of affecting your credit scores. All right, next slide, please. So here's a way to kind of an overall thing here of these strategies for your debt. Take control of your finances. The Get a Handle on Debt series give you tools to manage your debt by budgeting smarter, paying your bills on time, tracking your spending, paying down existing debt, and earning extra income. So again, this is a link here. Now, I'll comment on that in a few moments. So you want to use the link below to access the Consumer Financial Protection Bureau for additional information. As I mentioned earlier, this is where the information I received from this site is how I compile these slides together with the other two sources. Okay, somebody's asking the question about the PDF, how they're being shared. Okay, all right. So let's go to the next slide, please. So let's talk about debt relief service and credit repair scams. I think all of us at some point or another in our lives have probably gotten calls or been received some type of advertisement or something in the mail. Now, more or less, you see it online, but sometimes we will get these calls asking, hey, listen, you've got some debt, we're here to help you. You got to be very, very careful. A lot of these entities that are out there doing this, they know what they're doing. What I mean by that is they do their research. They try to target those people who are most vulnerable to this particular type of scam. So you want to be very careful. So debt relief service scams target consumers with significant credit card debt by falsely promising to negotiate with their creditors to settle or otherwise reduce consumers' repayment obligations. These operations often charge cash-strapped consumers. As I mentioned, basically what they do is the appeal of them being able to say, we're going to reduce your debts significantly, may appeal to a lot of people. And oftentimes these people are already in a situation where they are having some difficulty with their finances. And if they see a way that they possibly can get this taken care of in a better manner, then they will oftentimes put up the money that's needed when they really can't afford it and try to take advantage of this. So again, these individuals know who they are targeting. This is deliberate how they do this. All right, so often charge cash-strapped consumers a large upfront fee, but then fail to help them settle or lower their debts if they provide any service at all. Some debt relief scams even tout their services using automated robocalls to consumers on a do not call list. And I'm pretty sure all of us at one time have gotten these type of calls here. So again, you want to be careful. There are some that basically are pertaining to auto loan modification scams, where they say they can reduce your monthly car loan or lease payments to help them avoid repossession. The Federal Trade Commission also works to ensure consumers get a fair deal in the marketplace. So again, if you have questions about someone that approach you, or you get some type of marketing thing in the mail or online or call, be very mindful of that and do the research on it. And if you got some questions about that, speak to someone who is an expert in this type of thing. Next page, please. And there's the link at the bottom there. All right, for this particular one. All right, so credit repair scams are also frequently target financially distressed consumers who are having credit problems. These operations lure consumers to purchase their services by falsely claiming they will remove negative information from consumers' credit reports, even if that information is accurate. Again, you want to be very careful. If the information is accurate, it is valid, they're not going to be able to remove that from your credit report. The thing that you can do, if it's past due, simply make some arrangements with that creditor to pay that particular debt that you have. But be careful about those who say, well, we can remove that from your credit report, no problem whatsoever. You don't have to worry about it anymore. The Federal Trade Commission has brought scores of law enforcement actions against these bogus credit-related services, and the agency has partnered with the states to bring hundreds of additional lawsuits. But this is, in my opinion, a big industry out there that some people are involved in as far as these type of scams. Further, in 2010, the Federal Trade Commission amended its telemarketing sales rule to protect consumers seeking debt relief services like debt settlement or credit counseling. The rule prohibits for-profit companies that sell these services over the phone from charging a fee before they actually settle or reduce a consumer's debt. I repeat that. This particular rule basically prohibits these companies from selling the services over the phone and from charging a fee before they actually settle or reduce the consumer's debt. So again, that should be a warning signal if you receive a call from someone saying, well, we'll definitely help you with your debt settlement or your debt. We're just going to charge you a fee, and we'll get to work right on that. So be very careful. It also prohibits debt relief providers from making misrepresentations and requires that they disclose key information that consumers need in evaluating these services. So again, be very, very careful with any type of debt relief service and credit repair scams that you may encounter. Next page, please. So we're at the end of this particular session.